This is Matthew Cratter from Trader University, and today I want to answer the question, is it true that MicroStrategy actually holds zero Bitcoin? We see Michael Saylor's tweets all the time. As of December 9th, they are currently hodling 122,478 Bitcoin, which is worth about $3.6 billion right now. But I got a question from a viewer, and this question really blew my mind because it never occurred to me before to even ask this question. Does MicroStrategy actually hold its own private keys, or does it use a third-party custodian? And like I said, my mind was blown when I heard this question. The reason this is an interesting question and why there could be a problem here is this. If someone else is holding your Bitcoin for you, then all you really have is a Bitcoin IOU. And in that situation, you don't just need to trust the person holding your Bitcoin for you. You also need to trust all the actors surrounding them. You also need to trust that they cannot be bribed, tortured, etc. It's a little bit, when you let someone else hold your Bitcoin, it's a little bit like holding your gold in a German bank on the eve of World War II. It's when you need the gold the most that it's most likely that the bank will refuse your withdrawal request. It's easy to withdraw during good times. It's easy to take your gold out of the bank, but during a real crisis, especially during a monetary crisis, it's impossible to take your money or gold out of a bank. So it's very important to note that an IOU is not the same as a real thing. If you want to have real Bitcoin, you have to hold your own private keys, and later in this video, we'll talk about how to do that. If you have a Bitcoin IOU instead, there are political, regulatory, counterparty risks that you're taking on. You're not just taking on the risk of the protocol and the risk of the price volatility, etc., but you're taking on these other IOU risks. Bitcoin is meant to be used as a bearer asset. That means if you have possession of it, there's no third-party liability, there's no counterparty risk. It's very different from a US dollar, from a bond or something like this. These are not bearer assets, but gold, physical gold, and Bitcoin really is the first digital bearer asset. So it comes down to this. You either own the real thing or you own a counterfeit, possibly a counterfeit version. If someone else is holding it for you, you can't verify it or assay it, or you own an IOU. So I decided to go to MicroStrategy's investor relations page, and we're going to be looking at Form 10Q from October 28th, 2021. This is the most recent quarterly filing. And if you look under the risks section, it has this language. I'm going to blow it up here. If we, or our third-party service providers, again, this is MicroStrategy, if our third-party service providers experience a security breach or cyber attack and unauthorized parties obtain access to our Bitcoin, we may lose some or all of our Bitcoin. Now, this is sort of standard boilerplate warnings, of course, but it's a little more disturbing if you go deeper into it. Security breaches and cyber attacks are a particular concern with respect to our Bitcoin. Bitcoin and other blockchain-based cryptocurrencies have been and may in the future be subject to security breaches, cyber attacks, and other malicious activities, blah, blah, blah. For example, it's reported there's this hack at Coinbase where the accounts of 6,000 customers were stolen from. And then in parenthesis, MicroStrategy says the Coinbase exchange is our principal market. So we know that's where they've been buying the bulk of their Bitcoin. This also suggests that they may be using Coinbase custody as the place where they keep their Bitcoin. It points out that the flaw was subsequently fixed and Coinbase reimbursed affected customers. Here's the key paragraph, though. Nonetheless, a successful security breach or cyber attack could result in a partial or total loss of our Bitcoin in a manner that may not be covered by insurance or indemnity provisions of the custody agreement with a custodian who holds our Bitcoin. So this suggests that at least part of their Bitcoin is being held by a custodian. Such a loss could have a material adverse effect on our financial condition and results of operations. This is something important to realize too. If you have Coinbase, BlockFi, one of these other groups hold your Bitcoin, even if it's insured, in most cases, as I've demonstrated in previous videos, there's usually not enough insurance to go around if there were a major hack of the custodian's wallet. So this is this at least suggests to me that Michael Saylor's MicroStrategy is holding their Bitcoin with a custodian, at least a significant portion of it, or otherwise they wouldn't put out this warning. Now, this is a really weird thing because MicroStrategy is a tech company. It's run by its very tech-savvy founder. And my question for Michael Saylor would be, why can't you guys figure out how to safely store your Bitcoin without relying on a third-party custodian? This is one of the native features of Bitcoin that's meant to be held in this natively secure way. And Michael Saylor is such a great advocate for Bitcoin and such a smart guy, but why in the world would they be holding any of their Bitcoin at a third-party custodian? They could use a multi-sig solution, which we've talked about. You could have something like a 3 out of 5 solution where one key in a multi-sig solution, you need multiple signatures to move the Bitcoin. And so you can have, they're usually something like 2 out of 3 signatures or 3 out of 5 or 10 out of 12. So you could have something, you could even have a 3 out of 4 where one key is held by their law firm, one key is held by their accountants, one key is held by Michael Saylor himself, one key is held by Michael Saylor's mom. I'm sort of joking about this, obviously, but there are many different ways of doing this, and you could spread it out across the C-suite and across the external service providers like the law firm and the accountants. This would be using Bitcoin in the way that it's meant to be used. If you're finding this video helpful so far, be sure to hit that subscribe and like button. I noticed that a lot of people who watch my videos are not subscribed, and in order to help the channel grow, I'd really appreciate it if you would subscribe and tell your friends about it. Now, creating your own custody solution is not that difficult, especially if you're a tech company. Coinbase managed to figure it out. They created Coinbase Custody, not just for their own wallets, but for institutions as well. So if Coinbase can do it, and Brian Armstrong is an intellectual midget compared to Michael Saylor, if Coinbase can do it, Michael Saylor and MicroStrategy should be able to do it. Now, this is not just a problem. This isn't just an issue for MicroStrategy or you and me, for individual Bitcoiners. When you have concentrated Bitcoin like this, it's actually a problem for the entire Bitcoin ecosystem and possibly the future of Bitcoin as well. This is why it's very important. I'm not just trying to pick on Michael Saylor to get clicks. This is something that is actually very, very important. If most of the world's Bitcoin is held at centralized third-party custodians, it would be very easy to pull a 6102 and seize that Bitcoin. What's 6102? Well, it's fun to notice that the block time between difficulty adjustments is 2016, which is the opposite of 6102. But this is, Satoshi did this sort of inside joke based on Executive Order 6102, where President Roosevelt, in 1933, confiscated all the gold in the U.S. and made it illegal to hold any significant quantities of gold as a U.S. citizen. Maybe you could have a gold ring or something like that. But they did not want people to have this form of monetary exit. So they confiscated the gold and made it illegal to quote-unquote hoard gold. It all depends on the verb you use, of course. But the thing about this was it was very easy to confiscate because all the gold, or most of the country's gold, was being held in vaults at banks. And so if you were unlucky enough or stupid enough to keep your gold bars in a bank, you could not get it back. The government paid, I think they paid something like $20 per ounce for it, and then they promptly revalued it to $30, $33, something like that. This is the problem with concentrated holdings of gold, and this is why we ended up with the fiat system, because gold is very difficult to move around, and it ends up centralized, especially in bank vaults. And so if you have these honeypots of Bitcoin, it'd be very easy for governments in the future. I don't think this is a risk at all in the US right now, but you never know. In the future, something like Executive Order 6102 could take place. And if everyone's holding their own keys, we have Bitcoin totally dispersed across households in America and across the world, it becomes impossible to do this. You'd have to go door to door and put a gun to everyone's head, and this would be very politically unpalatable. They didn't even do this with gold. What they did is they mainly took it from the banks, and then they stuck it in Fort Knox, where it may or may not be today. So this is why Michael Saylor really needs to lead by example. He should not be having so much Bitcoin at a third party, at a centralized custodian, because it makes it much easier for these kind of problems. Now, even if 90% of the Bitcoin were were confiscated by a large government like the U.S., you could theoretically still make do with the remaining 10%, but it would be pretty ugly, and there's no reason ever to go there. The whole point of Bitcoin is to hold your own private keys. We could broaden this discussion to ask, as this tweet does, how does El Salvador hold its Bitcoin? They obviously have a lot of Bitcoin, not nearly as much as Michael Saylor, but this is at the nation state level. And the tweet goes on to say, as a sovereign nation, trusting a company, especially a U.S.-based custodian, is 100% a no-go. Hopefully, Bukele is smart enough to realize that there are a lot of people who hate him, a lot of big governments who hate him, and he definitely, hopefully, if he's listening, please don't have your Bitcoin in a U.S.-based custodian, because that can be confiscated very, very easily if they want to topple you. And so El Salvador, President Bukele there, they need to hold their own private keys and figure this out, as well as Michael Saylor. So this becomes a very big question, especially when we get nation-state actors and large corporations involved in Bitcoin. So what are the lessons for you and me? What are the lessons for the small individual investor? First thing, you want to buy Bitcoin, not MicroStrategy, the stock. It is a sort of ETF proxy, but it doesn't track that well, and you have this custodian risk now, I believe. The famous saying that you've heard, I believe it was Antonopoulos who came up with it, not your keys, not your coins, not your keys, not your Bitcoin. This means that if you have to ask someone else permission to use your Bitcoin, if you have to ask BlockFi, for example, to withdraw it, or Coinbase to withdraw it, you're not holding your own keys. After you buy your Bitcoin using Strike or Coinbase or any of these other services, you should withdraw it and hold it on a hardware wallet. This is best practices. The hardware wallet does not contain the Bitcoin, but it is a way of securely storing your private keys in a way where they're not touching the internet. Do not use a service like Robinhood that does not allow you to withdraw your Bitcoin. They will force you to sell it for fiat in order to withdraw it. There's been a lot of talk that Robinhood is going to allow customers to withdraw their crypto. Back in February of 2021, they said they were going to do it, and we're still waiting on them for doing it. They say crypto wallets are coming to Robinhood back in September. It's now December, so who knows? I don't think Robinhood's a very reputable company to begin with. What you want to do is hold your Bitcoin on a solution like the Trezor, withdraw it and hold it there. And you can buy one of these. They look just like this. They connect to the USB port of your internet. So if you wanted to learn how to do that, you can watch this video, how to buy and store Bitcoin the right way, in which I teach you how to withdraw your Bitcoin. Hold your own private keys on a hardware wallet. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.